So here we are to discuss a very important subject, the subject of financing and financing for sustainability, which is a very important theme right through this event, and indeed is a very important subject in the country and indeed the world today. So scaling up for public and private finance is key. If we have to finance for climate adaptation, loss and damage, rebuilding, and preventive strategies, then these have to be seen as critical issues for policymakers today. Adaptation finance absolutely has to be urgently scaled up, but even existing climate finance commitments have not been met. Adaptation efforts are also facing an implementation challenge in terms of funding. So we need to think about how to get all this money, millions and millions of dollars, transferred down to the local levels. And national and local governments can bridge the gap if donors step up. Now, the magnitude and type of investment needed goes well beyond the $100 billion committed by 2030 at a global level. And these need to be internalized during the upcoming COP27, but also internalized by a country such as ours. A majority of the financing support thus far is in the form of loans instead of grants. And it's very hard actually to get an accurate figure of how much has been provided to date. So collecting data would also be important going forward. Now, loss and damage need to be taken seriously in all discussions going forward, including the need for our government to deliver on their promise of green climate financing. Our leaders need to respond to the calls for a facility on loss and damage as well. This facility will likely not be where major money will be flowing through, but it's still useful to send a strong political signal about the importance of loss and damage. Critically, we need to unlock private resources because government cannot do this alone. And for this, public-private partnerships, unlocking the private finance space is needed to help build resilience. The Reserve Bank of India, the multilateral development banks need to think about how to support green finance and de-risk investment. And de-risking, of course, there are tools like guarantees, etc., which can help. At the country level, we need a pipeline of bankable projects which can bring funds in to the projects and also from offshore into the country in a cost-effective way. But the key there is that they have to be bankable. And then we need KPIs, which are the deliverables for mobilization of private finance. So this for us is a very important agenda as we go forward. And some of the world's largest emitters have stepped up recently with ambitious climate commitments and policy action. We've seen the recently passed Inflation Reduction Act of the US, which puts the US finally back on reaching its 2030 NDC target. In India, in addition to the net zero 2070 goal India set for itself, we are also supporting a new program called LIFE, which aims to spur individual action on climate change. So a lot has been done, a lot awaits to be done. Now, I was just looking at some of the numbers in a space I work in, water and sanitation. And as of this year, India needs 2.64 trillion to meet its UN SDG obligations, offering private sector an investment opportunity of at least 1.12 trillion by 2030, as per the Standard Chartered SDG investment map. So there's an opportunity here for the private sector too. And of this overall investment, nearly 10% is for clean water and sanitation. This infrastructure has historically been the subject of government funding, provides this has been happening through taxes and funding provided by municipalities. But indeed, the opportunity now for the private sector to invest in this, in clean water and sanitation, in affordable and clean energy and industry, in innovation, in infrastructure, in these and other areas, are all ways where the funding can come in to critical areas as is required. And as we look at this total investment, the average rate of private sector investment is much higher in terms of the benefit to the economy. So, and this is the opportunity for emerging markets like us, like India, to make more use of funding mechanisms employed by more developed markets, such as public-private partnerships. And new and innovative solutions, such as sovereign blue bonds, which is specifically to finance water infrastructure, could be another option. So as we look at the financing for sustainability agenda for a country such as ours, first and foremost, we need to develop a capital market strategy which is linked to sustainability, to finance green growth, tap the domestic capital market. And in doing that, green bonds, municipal bonds, yield cos, green IPOs are all crucial for providing capital for renewable or clean energy projects. A second aspect is establishing and strengthening the legal frameworks, because by developing green finance, or for making sure that we can strengthen the enforcement law, a strong legal framework needs to be established. The current financial regulations on commercial banks and other financial institutions, insurance and securities laws can be modified to accommodate some of these green elements. A third area is developing comprehensive policy support for green finance. If we develop a comprehensive policy support system for green finance, what this will entail is including, modifying, and aligning monetary policy. So that's interest rate, short-term liquidity operations, banking, other banking-related rates, lending policies, orienting these towards our sustainability agendas. Fiscal policies, that is tax preference for green businesses and industries, and all the way to the objective of low carbon and a green economy. So the policy support becomes critical. And the fourth aspect is mobilizing international financial flows. For countries like ours, this can be done by leveraging the Green Climate Fund to provide funding to projects which enable the transformation to low carbon and green economy, helping managing those transitions. Collaborative R&D and technology transfer programs with developed countries. The multilateral development banks can play a critical role in crowding in private finance by de-risking investment and lowering the cost of capital. And as we look at mobilizing these international financial flows, also looking at venture capital, startup financing to enable adoption of new technologies. So it is for us an exciting time in that India has embarked on the journey. The solutions are available. We have to make sure that these are comprehensive and indeed in a manner that directs funding into this key area of the green economy as we build infrastructure and as we continue on the growth path that our country is set on. Thank you.